Kelly Hushin here, editor at the TradeTech blog, and I'm here with Emmanuel Doe, president of Trading Solutions for Interactive Data, and I'm here at the Interactive Data offices in downtown New York City. Thank you so much for having me here.
Thanks very much, Kelly, for coming down.
So we're going to talk a little bit today about some of the trends that are happening in the market, what some of the challenges are going to be, things like market data surges. We're going to talk a little bit about high-frequency trading. So let's just get right into it, okay?
Sounds like a plan.
How do you think the onset of new regulations that are going to be going on, particularly in Europe, MiFID II, Basel III, Dodd-Frank in the U.S. here, how do you think they're going to affect your business here at Interactive Data?
Well, it's interesting because, Kelly, the market is moving so rapidly, and the transparency and accuracy and the requirements of all these regulatory mandates out there are driving firms and exchanges to have to change the way that they're doing business, right? And a lot of it is due to the flash crash problems. A lot of it is due to the financial conditions that have taken place and transpired over the past 5 years. And, but there's a clear need for accuracy, for transparency, both from the sell side to the buy side, from the buyers to the sellers in every single marketplace on a global cross-asset basis. And, at Interactive Data, we are definitely participating in a lot of the regulatory discussions that are out there, be it with FISD, be it with FPL, and a variety of other regulatory governing discussion boards, if you will. And, what's clear is that competition and complexity is going to be affecting the marketplace. Complexity around clearing, complexity around valuing portfolios with instruments that may have cleared or not cleared. In addition, the onslaught of technology, specifically with in the OTC markets, is going to be a huge trend. Technology is going to be critical to meet the requirements of any of the regulatory mandates that are out there right now. And so we at Interactive Data are investing heavily in technology to be able to help clients meet the regulatory changes that are coming about. Because the old days of voice brokerage and other types of methodologies of settlement and clearing and trading are just not going to be able to stand up to the scrutiny of accuracy and transparency. So we plan on helping clients vis-a-vis the technology and the capabilities that we will be bringing to market.
Great. So of these potential regulatory pieces that are on the table, what do you think would have the potentially biggest positive impact, and then on the flip side, the potentially most negative if it gets passed into law?
It's an interesting question with regards to positive or negative. I don't think that any one regulatory action is going to be more positive or more negative. There are different mandates that will impact different components of the trade life cycle, be it on the pre-trade basis, be it what firms need to do, or what they can be doing on the post-trade basis, or in terms of internalization, right? And so I think that what it really does is that these types of regulatory mandates that are coming out that are global, some are more regional specific, they definitely have they offer different opportunities to vendors like ourselves, and I don't think that they're per se one better or worse, and it just depends on the technology that we deliver, B, the client's pain problems and how we solve those problems.
So, Emmanuel, it's most likely now that a consolidated tape for Europe will be a privately run enterprise. Is this an area that Interactive Data is likely to be involved in? And if so, how will you decide what data will go into that tape?
Kelly, it's a good question. And, consolidated tape is something that Interactive Data is definitely participating in with regards to tracking, what the market really requires from the exchange perspective, from our clients' firms' perspective, and Interactive Data will be participating in the Consolidated Tape Initiative if we see that there is a clear defined benefit and capability that we can deliver to the marketplace as a third-party neutral party that can deliver a tape that can be of benefit from a transparency perspective, and so that's going to be the main differentiating factor. But I think that we will be participating in any kind of CTP that it goes out there for sure.
What's Interactive Data's strategy for handling market data surges?
Market data surges are a topic that's near and dear to Interactive Data's heart, because it is a challenge for all of our firms. It is a challenge for us. It is a challenge for competitors of ours, frankly, for that matter. And, you know, market data surges are, market data, it's no secret that market data volumes have been doubling year on year for the past, X number of years, right? And a lot of it has to do with the fragmentation in the marketplaces. A lot of it has to do with multiple points of liquidity and the ATFs and the MTFs that have been spawning up. Interactive Data is definitely focusing on clear monitoring, latency measurement, and capabilities to offer clients the assurance that we will have the right type of tools in place. Tools from perspective of optical taps into each level, each segment of the network, tools with regards to latency measurement, tools with regards to hardware utilization and performance measurement, as well as timestamping using hardware and GPS synchronized devices to be able to help clients to ensure that no market data is lost, no trades are lost, and that all packets are maintained throughout our own backbone network, as well as the services and infrastructure that we manage on behalf of clients.
So speaking of challenges, you mentioned that obviously the market data surge is something that you're handling and all of the market is dealing with. But what are some of your other key challenges that you're going to be dealing with over the next few years, and how do you plan to deal with them?
It's a great question. And, Kelly, by far and away, the number one challenge in the financial services industry is cost. Everyone is trying to contain costs. If you're a hedge fund, if you're a global bank, if you're a tier 2 bank or hedge fund, it does not make a difference. You are trying to contain costs, and Interactive Data and other firms are trying to assist with regards to the containment of cost. From a cost of delivery, cost of infrastructure, cost of maintenance, especially given the fact that technology has evolved so far in the past 5 to 10 years. There is a huge opportunity in the use of cutting-edge technology, be it cloud, be it managed services, be it co-location sharing, and other types of critical technology movements, including HTML5, that allow clients the opportunity to leverage Interactive Data's technological advances to be able to manage their cost infrastructure and to be able to grow profitably, as opposed to continuing to sink more as increasing market data cripples IT budgets around the world in the financial services industry.
So we talked about the flash crash earlier. I wanted to talk a little bit about high-frequency trading, which is often put to blame by the press as the fault for the financial crisis. Do you feel that this is the case? Do you think HFT is to blame? Should we be putting more stringent controls on HFT, or is this just an overblown media sensation?
It's a great question, Kelly. HFT is an evolution of electronic trading. It is actually a great tool that has enabled financial services firms to be able to capitalize on inefficiencies in the marketplace. So in terms of being an overblown media sensation, obviously flash crash, HFT, institutional arbitrage, taking advantage of the retail individual and trading, those are certain things that, obviously is a concern, and it's rightly so. But there are so many regulatory mandates and protocols that are currently being put into place these days that, HFT is frankly an enabler of execution and electronic trading. And anybody that is trading and could fat finger a trade any given day could cause a flash crash depending on the sentiment, depending on the market, depending on whatever it may be. So actually, HFT, I think, is something that is great. We see more and more of our customers engaging in high-frequency trading and electronic trading, and more customers are engaged in utilizing our proximity locations, in utilizing our co-location capabilities because they want to be next to the matching engines, because it offers them the capability to execute with better cost initiatives, frankly, and less cost. And as I mentioned earlier, cost is a critical component of every financial services firm's initiative this year and for many years to come.
So stay away from regulations for HFT, is that what we're saying, or?
I don't know about staying away from regulations. I think that the regulators will decide appropriately what amount of regulation is needed on HFT.
Okay, great. Well, thank you so much, Emmanuel, again, for having me here in your offices, and we look forward to having you at the next TradeTech event, hopefully, or seeing you soon.